Welcome everyone, Pat Mitchell here, and if you have ever wanted to know when exactly to go all in on a day trade, this video is going to be for you. So we are going to dive into the charts. A few things that I'm going to be covering in this video is when to use size, like more size than you normally would in a trade, what is going to be considered a high odds of success day trade, as well as go over technical lessons as well as daily chart lessons. So let's get into the charts. Give me a second here and let's get right into it. Okay, so before we dive into this, one of the biggest mistakes that day traders make, especially when they're new and struggling and just trying to get the ground underneath their feet, so to speak, in the career path that they've chosen as a day trader, is they don't know when to use small size, big size, medium size, whatever size. They just kind of size randomly. That's a big mistake. We need to use size only when we have the highest odds of success. So that's basically what we're going to be going over today. What is the highest odds of success type of trade for us in a day trading capacity? Now, remember also one more point I do want to make before we get into this is knowing what type of day trader or what type of trader you are. Are you a day trader? Are you a swing trader? Are you an investor? Do you hold overnight? What are you? That's a big deal. So me specifically, one of my, I guess, greatest attributes and biggest things that kind of help my success is understanding what type of trader I am. I am a day trader. I am looking for very short based, high odds of success opportunities on a day-to-day basis. Okay, I know that can sound like a mouthful, but you need to define what you are as a trader and what type of a trader that you are. So on this channel, we may discuss investment, speculation plays, day trading, swing trading, all of that. But mainly, this is a day trader's channel. So if you're looking for day trading education, make sure to subscribe to the channel because we release weekly videos and going over this very quickly here for you. If you go through the videos, there are a lot of videos, 767 videos. So ranging from everything from technical plays and a lot of mentality and psychology plays. Plus, if you go to the live area every single day, I release trade recaps where I go over the entries, the exits, the trade plans of the day, as well as the P&L. So you can see how the result comes day in and day out. But definitely go check out the entire channel if you've liked this, if you've stumbled upon this video. It is only going to be greatly beneficial for your day trading. So now let's get into this. Now, I'm a huge advocate of compiling checklists. I have hundreds, if not thousands of checklists, little checklists that I use to keep myself safe in these trades. So now let's talk about specifically when to use size. So number one on this checklist is daily chart. Okay, we need to go over and we need to take a look at where we are on the daily chart. Now, this is how I like to set up my charts. Now, if you look at my actual day trading charts, I'm going to have SPY up top and Qs down below. This is what I trade. I day trade SPY and I day trade Qs day in and day out. At Trick Trades, we have a basket of 17 different stocks, but mainly we will trade 2 out of those 17. And right now we are following the markets like a hawk. Those are your biggest opportunities right now and the easiest opportunities too. So you're going to see the daily chart on the left of both and then the intraday 1 minute on the right. Setup. Set your charts up for success. That is a huge point to this. We need to be prepared. So daily chart on the left, intraday on the right. So this is the daily chart here. Let's expand this and then you guys get a really good view of it. So we need to know there are basically 3 parts to a daily chart. There are lows, there are highs, and then there's everything in between. Okay, now I know that seems overly simplified, but it's important to point out, and I'll tell you why. When we are at lows, It's not like on a day trading capacity that there aren't shorting opportunities. There always are, right? But we are mainly looking for a long when we are at lows. And I'll point out how to determine we're at lows or what's going on there. Number two, if we are at highs, we are mainly looking for a short. Doesn't mean that there aren't long opportunities. There are. And I'm going to explain those long opportunities. But when we're at highs, we are mainly looking for a short. Now we're going to talk about everything in between. Everything in between will give you both a long and a short day to day, every single day. This is why I've said for the past 11 years trading, it does not matter what the market does. The market will give you the opportunities. I don't care if the market's going up, going down, ripping, shitting, consolidating. Does not matter to me. The strategy will all work the same. Day in and day out, there are high odds of success day trades that we can take and we can capitalize on. You just have to know how to exploit those setups. So that's number one. Where are we on the daily chart? So let's take a look at where we are right now. Well, we're obviously at a high, aren't we? So I want to talk about transitionary markets for a minute. This video at the beginning is going to be a little bit all over the place. I'm setting the tone and setting those puzzle pieces for you, okay, folks? So we're going to have a transitionary market. Transitionary markets are the markets. Do you see up at highs how there's a consolidation range, and at lows there's a consolidation range, right? And I can keep circling here. You're going to notice that it likes to consolidate before it likes to pick a direction. Transitionary markets, we need to know what how a transitionary market trades. A transitionary market trades like it's trying to fuck you out of your position, is the best way to put it, as blunt as that may sound. What they're doing in this situation is, number one, trying to compile information, whether it wants to go up or keep coming down if we're at lows. Okay. Same with at highs, whether we want to keep coming up or if we want to sell off. So you're going to have a day trading market on those days when it's a transitionary market. I have hours and hours and hours of education, professional education on transitionary markets. It's an important part of the puzzle, an important piece of the puzzle that a lot of day traders miss. So how do we trade in transitionary markets? Well, like I said, it is almost designed to trap you. So we need to be, number one, extra patient in transitionary markets. Number two, you absolutely need a plan. And number three, in that plan, on your stop, you do not stop out until you get stopped out. Why? Because number four, it is heavily emotional. Okay. So when we're in that transitionary market, remember, you need to be patient. You need to have a plan. You need to be very, very patient. And I know I already mentioned that, but it's extremely important. Follow that plan to a T. And you need a wider risk. And I'm going to tell you why. When we are in a transitionary market, we don't know whether we're going to come up or we're going to come down. But at some point here, you do pick a direction. You see at the scariest moment here on this day, how it looks like it's about to break out. Next day, gaps down, sells off. Okay. Once we pick that direction, it will come in, and then the following day is going to be a very big day. That's why I love when we are at highs and we are at lows, and it's very easy to spot. We can tell that we are at highs or at lows on the daily chart because of the transitionary market. That transitionary market is your friend. It will consolidate for multiple days. There's lots of money in consolidation. It becomes very predictable. It'll trade. And in case you haven't noticed on these, what does it do? We have highs and we have lows of that range. It opens up and it pops straight into those highs. This here, it opens up, dips straight into lows. It opens up right here, takes off. Where does it go? Into those highs. Do you see how that consolidation range becomes very predictable. We will test highs and we will test lows almost every single day in that transitionary market. Okay. Transitionary markets are important. I know that's a little sidestep to this, but if you guys are here for education, this is what you're getting. So that's kind of the beginning of this. We recognize we're in a transitionary market. So that tells us, okay, cool. We know we're at a top. If we are up at highs after a low and we come up, that obviously tells us that we are at highs. So now we need to start looking for certain information. What I like to do, and I'm going to talk more so at lows. At lows is a higher odds of success, and I'm going to tell you why. Because we don't have one factor that highs does. Highs has a sneaky little factor, and it's brought on by retail traders, retail shorts. So what happens when we're up at highs is it's very easy for it to continue to squeeze. And in a day trading capacity, and this is why I'm telling you, in a transitionary market, you really need to have that plan and you need to stick with it. What can happen here? Yesterday, we shorted this and it was an absolutely beautiful trade. We shorted coming up into pre-market highs, which was also the previous day's highs, high odds of success. You can use more size in that. Why? Because the risk, number one, your risk is an acceptable risk into multiple areas of support or resistance. So on this one trade, and I'm going to point this out to you guys, we had pre-market highs right here. And then we had, so this is pre-market highs as well as previous day highs. That's this level. Now, right above in here, we have a gap fill. This is gap fill. And then above, we have multiple, right there, multiple resistance areas. We have previous close, highs, previous open, previous close, previous open. You see all of that resistance? And it's all within 1 point. So that level up top, our top level here is about 608. So that's somewhere in this area. So that's 608. Well, our entry is where? 607. 607. 1 point. 1 point of risk on a $610 stock or ETF. So you know, with all of these multiple resistance points, it has no choice, by the way. If we open here and we push and it comes straight up, it has no choice but to reject one of these three resistance points. Now that might sound like a lot and you're like, man, but it can keep going. It's and that's fine. That's okay. We need a high odds of success trade. And that's what this is telling me. We have three resistance points. And in those resistance, it has to reject one of the three. It has to. It'll have no choice. It's a lot of people fear when they're trading. If it opens here and pushes, it's just going to do this and keep coming up. That is not natural movement. My main methodology to day trading is called the natural movement theory. And at some point, I'm going to be putting out a full detailed book on it, because I believe with natural movement theory, once you understand that, there's nothing the market can't throw at you that you wouldn't be able to understand or be able to handle. If it were to come up to this next point, it will pull back. So when you start here at point 1, this is 2, and this is 3, you start in at 1, and let's say it keeps going, you add into number 2, it'll pull into number 1, you will pay yourself, you will be green. It might not be a huge trade, but that's not the point. It's not about hitting a home run trade, right? And if it wants to keep going, you add and you correct into number 3, and it will pull. It has no choice, because it is the relationship. And I want you guys to remember this. Some of you will understand, some of you won't. The relationship between distance and retracement is extremely important. And I'll explain why. Let's say we open up here and we push all the way here. Well, you're going to get and receive about a 50% retracement before you'll have a proper push back up. Okay. So these 50% retracements or into the next natural level are really important. Now, that's again kind of a side note, but I did want to point that out. But in these trades, so checklist point number 1 is your daily chart. Number 2 is understanding what type of market you're in. Number 3, you want to trade with multiple levels of resistance or support, depending on what side of the trade you are. Whether meaning if you're taking going short or you're going long. On the long, let me point out the long on this. The long had a massive amount of support as well. It had this here, which was, I believe, the 5 EMA. Oh, no, sorry, trend. There's a trend there. There's a major trend. That's right. So that was trend. And then we had the 9 EMA here, and then the previous close here. Now you're going to see that it slipped and it actually broke. That's fine. But that level, that first level, just like here, execute that level, pay yourself. Once it comes down and breaks that, you stop out. It is a high odds of success trade. If this wanted to keep coming down, it was within a point into the previous close. One of these 3 points will bounce. So again, you need multiple resistance, support or resistance levels that are within a tolerable amount of risk. I'm going to say that one more time. You need multiple support or resistance levels, valid support or resistance levels within a tolerable amount of risk. Remember, we need to risk something in these trades. One of the biggest detriments and drawbacks to a day trader's trade plan is they don't give enough risk. They're risking 10, 15 cents, 20 cents, 30 cents, 50 cents on a $600 stock or ETF. You see how ridiculous that is? It's not going to work. You need about a point. It's pretty close there. Okay. Now I have multiple risk strategies or 2 main risk strategies. Number 1 is a technical, and number 2 is standard risk. It's something that I developed over the years going through the daily chart. And it may seem like a really arbitrary type of stop where it's like we're giving it 1 point. No, there's far more to it. And it has to do a lot with the levels that it wants to blow past. That's a whole other video, by the way. I want to backtrack and I want to talk about this daily chart again. This daily chart is important and knowing where we are. So that really sets the tone. If you're just kind of coming up or coming down on the daily chart, you're going to have good trades, but it doesn't mean that you can size huge. Okay. When we are at these highs on the daily chart and we are starting, it's not just day 2 of the consolidation. Like we're starting to consolidate and we're obviously downtrending. It's picking a direction. So once we've seen that the direction is starting to be picked, we know we want to lean one side or the other. So we are going to lean short. Sure, we could have taken the long. Sure, we could have. But the short will have more follow through. Now, this is a mistake that a lot of traders make. There will be a long and a short on every single chart, no matter what day it is, always. But we need to know what has more follow through. If we're looking to increase our risk via size, because that's what you're doing. When you use more size, you're increasing your risk. You need to have some sort of a payoff for that risk, right? That only makes sense. Like your risk reward needs to be increased. Like you need far more reward for that risk because you're exposing yourself to the market like this. So when we have these high odds of success trades, again, number 1, daily chart. Number 2, where we are on that daily chart, highs or lows. And then number 3, we understand that the transitionary market is coming to a head. Number 4, we have multiple support or resistance levels on to that trade plan within a tolerable amount of risk. you know it's going to stop at one of those levels, that's where you can start increasing and applying your size. Now let's talk about sizing on the intraday. Okay, so sizing for the actual trade. Now, a lot of people, because I'm talking about this, if you're using more size, so let's say you use 100 shares, and we're just going to use a round number for this, and that's your normal trade. Okay, so if we're going to be increasing our size, let's say we double our size, 200 shares, right? Well, you can't just whack it here with 200 shares. Why? Because we have those other levels. So how do we size for this? Well, let's go over it. So let me just clear this board, draw out these levels again for you. So we have our first level, our second level, and then our third level. Levels 1, 2, and 3. And we are going double size with 200 shares. So on this first one, we can use about 75 shares. We want to make sure that if it goes higher, we are not going to be emotional in our trade. We need to protect ourselves. We need to protect ourselves from ourselves. So some of you may be thinking, but I want to get 200 shares in. And what if it comes in like it did and then reject? And now I only have 75 shares in that trade. Boo fucking who, man? Be content. Be grateful you executed a trade and it worked and you made some money. That's it. You can't always try and get in full size. That's very hindsight. We don't know it's going to come into this level and reject immediately. We need to always prepare for worst case scenario. Okay. So we add and we start with 75 shares. If it comes into this next level, we have 75. We're going to add another probably 75. So now we're in at 150. We save our last 50 for here, and you're at your full size, your full potential size by the top resistance level or top risk level. Do you understand? We never want to size in fully into that first level. Why? Because there's a potential for it to go higher. And what are you going to do? If your maximum you are going to be okay with is 200, you cannot not add by that third level. You have to add. So what are you going to do? Add another 200. So now you're 4 times the amount of size that you originally take and double the size of your big trade. You're going to damage yourself. Stop oversizing. Have a plan and stick to it. So when do we think about our sizing and this and how to size in at these levels? Pre-market. All of these trade plans should be determined at 9 a.m. That's when I do all of my trade plans. My trade plans are announced during the pre-market plan of attack at 9 a.m. every single morning. And those are the trades we take. Rarely do we deflect from those. The only times that we do is it depends on if some data comes out or something changes, or I see something on the chart that, that's what we're doing. We always follow trade plans. Those trade plans should be done at 9 a.m. in the morning. You have 30 minutes to go over your trade plans, develop your trade plans. You know how the morning is trading, and then you execute the trade plan at the market open. So that's how I would do it here. Now, to wrap this up, we are looking at the daily chart. We are determining whether we are at highs or at lows. Why? Because we want to know which way to lean. If we're at highs, we want to lean short. Doesn't mean you have a bias. That's just where your highest odds of success are. So that's where you want to put your money. If you get a long, let's say on this one, we dip down and there's a support level here. And we want to short on this trade. We want to short to use more size because that's what we're here to do. We want to use increased size. but let's say we get a long instead. We get a dip at the open into support. Well, we can execute that long, but you cannot be using more size or double your size. Why? Because that's not the trade plan. We want to lean short on this when we are at highs. Because just like other days here, you see how there's longs? This here is a real good example. Opens up, dips into the opening price, and then rips. Well, you can absolutely take that, right? But you need to use smaller size. Why? Because you're playing with fire when you're going long into highs. That's why. Your highest odds of success, and if you take a look when we are trading like this in this transitionary zone, what days had bigger days and more of them? The shorts. Right. Makes sense. Same with the longs. Right here. You're going to have more opportunities long, bigger opportunities. And that's what we want to do. We need to know and understand the type of market we're in, and then we need to develop a plan and then size appropriately and have a sizing plan. So on that note, folks, I'm going to wrap this one up. Thanks for coming out. Make sure to like, share, and subscribe if you are interested in a bunch of day trading content. Also a note, if you don't do YouTube, every evening I release my trade recaps on X as well, at Trick Trades. And then if you are sick and tired of spinning your wheels, head over to tricktrades.com, go get signed up and get professional quality day trading education. We are an educationally based day trading room. You can check out what we all have to offer. We offer all of our strategies, even at the introductory price in guidance, which is size up guidance. You get our entry strategy, our risk strategy, and our sizing strategy, all included, plus daily live screen share, video lessons, you name it, it is all included. A beautiful chat room to communicate with your community members as well, all of that stuff. And if not, that's fine, you don't want to join, head over to the Trick Trades YouTube channel and watch every Sunday night we release these videos. Have a great day, weekend, night, afternoon, wherever you are, and I'll catch you next time. Adios.